All right, today we're diving into an investment analysis that points to a really fascinating and kind of surprising winner in India's booming electric vehicle market. So forget the huge names you hear about all the time. This is the story of a small company that is quietly making some serious profits.
We hear about the EV revolution constantly, right? But here's the thing. A lot of those big, flashy companies are just burning through piles of cash. So it begs the real question for any investor. Where's the actual profit in all of this?
Well, the analysis we're breaking down today says the answer isn't where you'd expect. It's not with the big guys. Instead, it suggests looking for, and I'm quoting here, a potential hidden gem. We're talking about a smaller player that's just quietly and brilliantly doing its own thing.
And that hidden gem might just be a company called Zelio e-mobility. That's what we're focusing on today, and according to this report, they are a company you're going to want to know about.
So what's the deal with Zelio? Well, they make electric 2- and 3-wheelers, but here's where it gets interesting. For starters, they're already profitable. That's huge. And they're not going after the big, crowded metro cities. Nope. Their focus is on smaller Tier 2 and Tier 3 towns. Plus, and this is a big one, the founders still own a huge chunk of the company, and it's basically debt-free. That's not your typical EV startup story, is it?
Now, a company like Zelio doesn't just pop up out of nowhere. To really get why they're succeeding, you have to understand the enormous wave they're riding. The whole EV explosion happening in India right now.
And you want to talk about momentum? The company's stock shot up something like 170% in 2025. And listen, that's not just speculation or hype. That's a direct result of some really powerful things happening on the ground.
So what's fueling all this? Well, you've got a perfect storm, really. The government is pushing pro-EV policies. Fuel prices are going up, which makes electric vehicles look a whole lot cheaper to run. Plus, there's just this growing desire for cleaner, more affordable ways to get around. And the market for electric 2-wheelers, it's expected to grow at about 14% a year for the next decade. That's what you call a serious tailwind.
Okay, so the market is massive. We get that. But how is a relatively small company like Zelio not just surviving, but actually winning in this space? The secret, it turns out, is in their laser-focused niche strategy. This is where you can really see how they zig while everyone else zags. Think about the big names like Ola or Ather. They're all about high-performance, premium scooters for the tech crowd in big cities, right? Zelio does the complete opposite. They're all about smaller towns, cost-conscious customers, and simple, easy-to-use vehicles that don't even require a license. And by doing that, they keep their own costs way, way down.
Yes, so their ideal customer isn't some tech bro zipping through downtown traffic. We're talking about housewives who need to run errands, students going to class, senior citizens who just want a simple way to get around town. It's a huge market that, honestly, the big guys have pretty much overlooked.
And you can see this strategy playing out in their numbers. They're not putting all their eggs in one basket. Their biggest single market, Haryana, is only about 26% of their revenue. The other 74% is spread out all over India. That shows they're building a really broad, stable foundation for their business.
All right, so the strategy sounds pretty brilliant, right? But does the math back it up? Let's dig into the financials, because this is where the story goes from interesting to really, really compelling. Okay, first up, revenue. Just look at this growth. In just 2 years, they've gone from about 51 crore rupees to over 172 crore. That's more than tripling their revenue. We're talking about a compound annual growth rate of 137%. That tells you one thing for sure. Their niche strategy is absolutely hitting the mark.
But here's the kicker. It's not just growth for the sake of growth. It's efficient growth. This number, 51.8%, is their return on capital employed. All that really means is how good a company is at turning $1 into more dollars. And at almost 52%, that is just incredibly efficient. It's basically a money-making machine.
So, where's the money for all this expansion coming from? You might think they're taking on a ton of debt, but nope. Their debt-to-equity ratio is just 0.23. They're practically debt-free. They're so profitable they can fund their own growth, which, from an investment standpoint, is a huge deal. It just takes so much risk off the table.
And this really gets to the heart of it. Let's call it the profitability divide. On one side, you have the big, famous competitors, all losing money with negative margins. And on the other side, you have Zelio, solidly profitable with about a 12% margin. Honestly, if you take one thing away from this whole analysis, it should be this. In a sector swimming in red ink, this company is actually making money.
Okay, but let's be real. No company is perfect, and no investment comes without risk. So to get the full picture, the analysis also dives into the potential bumps in the road.
So here's a quick breakdown. The strengths are pretty obvious, right? That crazy high profitability and their solid grip on a niche market. On the flip side, their weaknesses, well, they're still a small company, and the stock isn't exactly cheap. The opportunities are enormous, that whole EV market boom, but the threats are just as real. You've got intense competition from the big guys, and the risk that government policies could change.
So if we drill down a bit, these are the big question marks. Can they keep this amazing execution up as they get bigger? What happens if the government subsidies that help the industry suddenly change? And what happens when the giants finally wake up and notice the super profitable little niche they've carved out? These are the things you've got to keep an eye on.
So, what's the bottom line? After weighing all the pros, the insane growth, the smart strategy, against the cons, and the very real risks, the analysis we're looking at comes to a pretty clear conclusion. It gives the company a buy rating. The final verdict is that the strengths and the massive opportunity just plain outweigh the challenges.
And that really leaves us with this one final thought. All the evidence points to Zelio being a profitable little fish in a giant growing pond, a pond that's also full of huge cash-burning predators. It's found a brilliant way to not just survive, but to thrive. So the big question for the future is, can this clever little fish grow up to become a shark?